Xerox stock dropped around 11% for the day. I'll tell you what happened. Basically, inexperienced retail investors panicked and capitulated on the news of a shelf offering of $250 million. What happens is people, especially retail investors, they panic at the word offering in a headline. It resulted in a sell off, and as you know, selling begets selling. It turns into a vicious cycle. That's what happened. In addition, for the traders, it was quite a grim day as well, as stock structure broke an immediate support, and obviously the traders had their stop losses hit. So it was a tough day for a lot of Xerox investors and traders. But a quick word on this shelf offering so people understand a few points actually. Right, first point. There's no dilution or offering yet. Nothing's happened. Some would have thought there was an actual offering at such a lowly stock price. It's not. A shelf offering just basically means the company, in this case Xerox, has the facility, the option to do a takedown, i.e., issue shares to the value of 250 million in the future. In the future, not present. Nothing's happened right now. Secondly, touching on that, there's no guarantee that Xerox will do a takedown, i.e., opt to issue shares and dilute, never mind to the value of 250 million. It's just an option for the future. For the next 3 years, it's on the table as an option. It helps the company to have greater scope to deal with liquidity and funding issues in the future if they arise. It gives the company more maneuverability and ability to handle liquidity stress. Nothing's happened right now. That's key. Then thirdly, it's to the value of 250 million, which in the grand scheme of things for Xerox is not a significant figure. Obviously for you and I, it's a massive figure. It's massive, right? It's mind-boggling, 250 million. But for Xerox, let's put it into perspective. Their free cash flow projection, or not projection, their free cash flow suggestion or estimate for this year, 2026, is around 400 million. Put that into perspective. So it's not a lot of money for Xerox. Xerox isn't some startup looking to grab all the cash that they can to fund a ramp up in operations. They're not doing some sort of trolley dash here. They're not. It's a mature business. Founded in 1906, it's over 100 years old. Steve Brandozak, that's the CEO, he's a steady Eddie. He's a reliable pair of hands. Right, and in my opinion, Xerox would not. So this is my fourth point. In my opinion, Xerox would not issue shares at such a lowly stock price. They wouldn't just destroy shareholder value just like that, especially considering that the executives have skin in the game as shareholders as well. Now, companies of this type of standing, mature companies like this, would wait for stock price appreciation before diluting in any case. That's my opinion. They won't dilute at an all time low. Again, that's my opinion. Yeah, companies won't do that if they can control it. There's no evidence that Xerox cannot control it. And then, fifthly, all in all, retail investors were, let's be honest, they were scared out of their shares today. This is why the big players win and retail investors lose out because they don't hold for the long haul. This is just another example. It pays to sit back and not act on impulse when news comes out. It's always best to digest the news, understand it before hitting that sell or buy button. Well, let's remember resilient and experienced investors do sit back, digest news, and make data driven decisions rather than impulsive decisions. Let's remember that. That's why they make the big money. Now, what I did today is I was shopping. I bought more Xerox stock today. The yield's looking more and more attractive, and the upside potential is there, in my opinion, given the proviso. Xerox has to execute. That's the proviso. Now, results are due later on this month, so hopefully investors get something to cheer about soon. Now, none of this is investment advice, none of it. It's all for entertainment and information purposes only, but please do like and subscribe. Thanks for listening.